All right, you're looking at a daily chart of the Nasdaq, and today was a monumental day when the Fed actually made their pivot towards, the bias towards raising rates to now they admit that they may need to lower rates, and that changes everything. And we need to change with it, with the market theme. Obviously, we've had the green light on for a while now, and we're in a power trend, and everybody's been aggressive and making money, and that's all good. But I'm going to have to take a step back here because I believe I'm going to go to the weekly chart. This is going to be a long video. I got a lot of stuff to cover tonight. Fair warning, as Van Halen would sing, fair warning. Anyway, I believe that our bull market started, our new uptrend started in May of 2023 as we came out of this cup with handle pattern, made the low in October, made the turn here, pulled back, and then finally in May, I think it was this week right here, May 10th was the actual day. Where are we at here? Yeah, this week here. And then that started our new bull market here in that week, the 19th. And I'm going to go back to the daily chart. Sorry for messing with you, but there's your pullback here that I just showed on that chart. Pullback, and we didn't really break out until this day here. It doesn't look like much, and this is why it's so subtle, and you got to look at every bar. May 10th, right there, it was up 1%. The volume was higher than the prior session, and I believe that was the start of our new bull market. People get upset when I say bull market. Our new uptrend, and we had a power trend all summer, and then we had the classic. This is textbook stuff here. 12% pullback with the 3 legs down in August and September and October. We undercut the 200 and now rallied back through. We had a follow-through day, back through the moving average, back into our power trend. I want to point out here one thing, because people get nervous and they want to sell into strength, and that's all good, but you could be missing out on a big rally if you're selling all your stock. Stocks, we have a upside bias now. We're in an uptrend, so the bias is to the upside. Last year it was to the downside, and today was a monumental day. And as I said, is the Fed pivot, and that kind of changes things. I mean, you need to start looking at smaller mid-cap stocks. I've been pointing this out here recently, and now that we have the pivot, the rates are going down, and those rate-sensitive stocks are going to start soaring, and those bigger cap stocks like Apple, Microsoft, Meta, they're all going to still do well, but you're not going to hit a grand slam with those. And I've been trying to point that out recently. I just wanted to make a note here. If you look at the SMA, the 50 SMA down here near the bottom of that box, and you can see that it's 6.8% above its 50 SMA. And as it rallies there, you can see the number 7.2, 8.0, and it gets up 7, 8, it's pretty common, over 6, right? 7, 6, 9, it gets up to 9, 9.2, 10. So it can get, 9% above its 50 simple moving average and still be okay. Yeah, it pulled back here. And I'm not saying this is going to do exactly the same, but even when it pulled back, it was still 6.5% above its 50 simple moving average. Today, yesterday we're 6.3, today we're 7.5. So even though people say it's overbought, it's stretched, it's gone too far, too fast, it can still go higher. And it has in the past. And even though this is a powerful rally, this new rally could be even more powerful as we go into 2024. Just keep an open mind. That could be a possibility. And don't be all scared that you have to sell your stocks into strength all the time and the doom and gloom, the world's coming to an end, okay? I always say you don't make money in a linear fashion. You make it in spurts. You made it in a spurt here and you lost it here, and now we're in another spurt. So this is the time to make money, not time to be, cowering, like a turtle in its shell and selling all your stock and listening to the bears. The market's in an uptrend. The bias is to the upside. I think we have to acknowledge there's a pivot here to smaller and mid-cap stocks, and we're going to be looking at a little more towards those. Although I still like, I mentioned, I've been mentioning for a while, there's big volume here today on that move. It was up 200 points, 1.38%, closed at 14,733. What's significant about that is I go back to the weekly chart, if Market Smith is going to play along here. That took out the old high from, I want to say March 29th of 2022. That high there, 14,646. I'm sorry if I'm a little scattered today. There's just a lot for me to cover. And I want to get the information out, but you can see this, if you looked at charts for a while, you can see this is a thing of beauty here. Yeah, this is a thing of beauty. And now we move higher, just breaking above that old high. Are we going to take out the 16,212? I don't know, maybe. Take it one day at a time. But for now, there's definitely a bias to the upside. And Chairman Powell was playing Santa Claus a little early today. I was really surprised how dovish he was, and just not really dovish, just acknowledging the situation that maybe he doesn't need to lower rates. Although they said that they're probably going to bring him down. He doesn't want to be late to lowering rates, but the market kind of sniffed this out already. So anyway, I'm going to move on. That's it for the Nasdaq. Looks real good. I mean, if you just take a look at that chart with this big volume coming in recently, and the six weeks in a row up, 7 weeks. I mean, this market wants higher. Not going to go up every day, but in general, the trend is higher. Okay, I've got to get to those stocks that I mentioned. Oops, sorry about that. I'm not going to do that. I'm going to go to the IWM because I've been mentioning this for a while now. And this is another beautiful cup, with handle pattern, big breakout today. If we look at the weekly, we can see the base on base pattern, then this index has been hit harder by higher rates. Now that the rates are coming down, this is going up. And if you look at the 10-year today, it's down near 4%. This thing is diving. So as long as this is going down, and I like to play TNA because, if I'm going to be into an ETF, which I don't like ETFs. Everyone knows I don't like ETFs, but I'm going to be in one. I want to be in a leveraged one to take advantage. And this thing looks like a thing of beauty as well. The 41.65, there's definitely, on target here as long as the, like I say, the 10-year keeps coming down, and that's the trend. And with the Fed's pivot, as the rates go down, those rate sensitive stocks, I'm going to show you some here in a little bit. Those are going to outperform the larger cap stocks. So anyway, a nice move today, 10% move in an ETF, not bad. That's a leveraged Russell 2000 bull, 3 times leverage. And there's the Russell right there. I don't like Market Smith Russell chart because it doesn't give you the volume. But anyway, Russell, nice day today. Okay, I'm going to move on to our stocks. I talked about Apple. Now, the reason why I've been bullish on the Nasdaq is because these stocks are set up in bases. They sold off. This is 6 months in the making here, and now it's trading higher. Making near new highs. The 198.23 was the high from back in last summer, I believe June. It's been 6 months. Today, 198, so it's just 23 cents below that. When it made it on July 19th. Okay, yeah, the high in the market, July 19th, stands to reason. Okay, Microsoft didn't go up today. Oh my gosh, we're doomed. Curtains for Microsoft. So what? It was flat on this session, not a big deal. You can see it pull back to its 21. This thing looks like a thing of beauty. Giving you a chance to get in. I think over time, Microsoft's going to do okay. I know Adobe had a little shortfall in their revenue tonight. I don't know if that's going to affect these stocks or not tomorrow. We'll have to find out. It's part of the QQQ. This is Meta Platforms, once again, on our watch list. Pull back to its 50, kind of squatted there, now bounced. The last few sessions, pull back to the 50. Still bouncing, but, it's flat today again. Giving you a chance to get in. These things have had big moves, so you don't expect them in 2024 to move like they did in 2023, but I still think they're set up to move higher. They're not going to blast off like some of the stocks I'm going to show you a little later, but yeah, I mean, these things they look good. Amazon's another one. I like these first 4 out of the Mag 7, and this one was up 1% today, just pushing away from this base here. Yeah, I like Amazon as well. Google had some news relative, I don't know, to lawsuits or whatever. These big companies have lawsuits all the time, but it's below the 50. So I like it even less. And Tesla, they had a recall of, a gazillion cars today. It still went up $2. Yeah, but Tesla's struggling. And then NVIDIA, NVIDIA, some in the semiconductor sectors, they're spreading the love around a little bit to AMD and KLAC and Applied Materials and Broadcom, which is great that it gets spread around and not just one stock going higher. This thing's up over 200% this year. So anyway, I'm going to move on. Dan Ives at Wedbush today upgraded the cybersecurity stocks, and I couldn't agree more with him. They did studies on the finance, the CFOs and their line items, and the one area they're going to increase next year is their cybersecurity. There's been a lot of hacks, and so companies can't afford it. And he upgraded the entire sector. CrowdStrike up another $3 today, just trending higher. I got to admit, I had alert for 250. And I trimmed some today at 250. And I'm not one of these guys that sell into strength and missed a big move, but it's just getting really big in my portfolio. I had sold half into earnings and then bought, if I have 100 shares and I sell 50 into earnings, after the earnings call, it goes higher, I buy more back. I'd buy like 60 back. So I had more than I had to start with. I paid a higher price, but it was just like insurance. And now this thing just keeps going higher, It was down to 218 on earnings day, and now it's 250. So I just trimmed a little bit. I want to keep it around 10 to 12%. I don't want to have overloaded in my portfolio, because I also own this one, Zscaler, which was upgraded at another company. Rosenblatt upgraded it with a 245 price target. So these institutions are coming out and upgrading the cybersecurity stocks, and they're just trending higher. I mean, there's nothing really to do here if you own them. Yeah, I did trim some because it got big, but you can just watch these things grow as they trend higher. These are kind of the stocks I'm talking about that aren't the big mega cap tech stocks. 31 billion market cap, but this could double or triple. I mean, I could see it being 100 million market cap, 100 billion in a few years if they have 6, 7, 8 good quarters of strong sales and earnings growth. I don't see why not. Palo Alto Networks, this is a cash cow of a company, is well run. This return on equity and cash flow, these guys have it all. Yeah, they're the leaders financially, in terms of revenue and but sales growth. But these guys made a new high today, upgraded, moving higher. There's nothing left to do but watch this thing grow. Maybe buy on pullbacks if you don't own it, or if you want to sell into strength and trim some at the profit taking zone. That's always wise, but I wouldn't trim too much, as like I said, the bias is to the upside here, and you could be cutting off some big profits on these cybersecurity names. Anyway, I'm going to move on. I got to go to the drug names. Regeneron making new highs, breaking out of a base. That thing looks good. Vertex had news on a drug today, and that's a gap of 13% with that kind of volume. Yes, that is a move that we do not ignore at all. ACAD, they had favorable legal decision, and this thing was up 34%. A couple other ones, these small caps is what I'm talking about. You can hit some grand slams here. This is TG Therapeutics. It came up to its 200, got rejected like Matombo, came back to its 10. Now it's right back up to its 200 again. So it's kind of in limbo here between the 10 and the 200. Eventually I think it'll power through there. I don't know when, and close this gap here at 1956, which is only $3 away, but still that's a nice little move. 20% move there for that one. And then Viking, Pfizer came out today and talked about their shortfall, and COVID sales are down, of course, and they're going to get into the weight loss market. This is definitely a takeover target. I know it's not wise to buy stocks just because you think they might get bought out, but this one has a very good chance of getting bought out. So it was up almost 6% today. Yeah, 1.9 billion market cap. So these are kind of some of the stocks that I'm looking for to make grand slams. ELF, I put this on our watch list yesterday or today. I forget what day, but it's been on for a while. I wanted to get in at 112. I put it on at 120. I put it on again at 130 as it's just trending higher. Now here it is at 141. I still like it. People think I'm nuts. I should sell it, but I still like it. To me, this is just setting up in a base. Yeah, it may pull back, in a couple days and allow these moving averages to catch up. But if you look at the weekly chart, it has not had a base like this, since last summer. Summer of 22, had this beautiful run. Now it based again. And if it does something like that, I don't want to miss out on that. I'm not saying it's going to do this again, but it could. It's done it in the past. So yeah, I'm not selling my ELF. And what do I expect from ELF? Well, I expect it to kind of go sideways and allow the moving averages to catch up for a couple weeks here, and maybe into January. It gets a nice earnings report, the moving averages catch up, and it trades up to 200. That wouldn't surprise me. Deckers is one that just, this thing just keeps going up. It's a one-way stock right now, up $10 after hours, of probably small volume, but up nearly 2% today, $13. It just it gapped out, and this is why I pay attention to earnings gaps. Gaps up, trades higher, forms that little shelf pattern, pull back one day on a downgrade to its 10, and now just rips another 150 points. Just ridiculous. Like I say, the bias is to the upside, and you got to be in it to win it, folks. This is Chipotle. I know some of you at MC Stock Charts own this one, and have been saying, "Oh, great trade. Thanks for bringing this to my attention." Blah blah blah. Well, that's what you pay for. Had this little shelf and pulled back to its 10. Now blasting higher, 23.40. I like that one. I also like Wingstop, although I don't own either one of these, and I've never been to a Wingstop. But pretty similar here, action here, just trending higher. Pull back to the 10. That's the support line as it just trends higher. So Wingstop, and then of course Lululemon, the king of apparel, broke out and just trending higher. It's forming a shelf now around that 500 level, flat on this session today while the market was ripping. But these things, they march to the beat of their own drum. I would say that 500, there's a shelf there and allows the moving averages to catch up. It could be an add-on buy point for Lulu. Anyway, that's it for the retailers. Oh yeah, the home builders. And this is definitely an area that'll be interest rate sensitive. And the market, like I said, sniffed this out from Jerome Powell, Santa Claus today. It's been going up, broke out of this little bull wedge pattern here, the cup with handle. And it was up 3% today. Nice move. They were all, same looking charts here, really. They all look the same. Toll Brothers there, Pulte Homes. Yeah, it looks good. Builder, we put this one on our watch list, and I still think this is actionable, just like ELF. Maybe the needs to trade sideways and have the moving averages to catch up. But to me, it's very similar to ELF. And that, yeah, it made a big move, but the move could just be starting. Just keeping an open mind there. Taking it one day at a time as well. And Sherwin-Williams, it's in the paint group, construction, home building group. And this one blasted off another, I said it's a slow mover and it's up 3% today, but Sherwin-Williams is a really good company, well-run company. Okay, I got to get to the software names. Not going to leave out the software. Duolingo, new high today. Gapped up after earnings, just formed a little shelf there, and eventually, breaks to new highs. That's why you pay attention to these earnings gaps. Institutions come back, they nibble a little bit, and they come back for more. ServiceNow, a couple of you at the MC Stock Charts own this, and this is just a monster. I don't know. I thought I would have trouble with 700, but it kind of blasted through it. Today pulled back slightly. Actually, it was just flat, but yeah, it got up to 717. I would think they would have trouble with 700, but we'll see. Snow, this has been on our ready list. Still looks good. If you didn't get it, I still think this is actionable here. 192 is the buy area, and yeah, Snowflake looks good. So does Datadog. There's another one on our list. Yeah, up 2% today, but just pulling back. This is a nice little bull wedge pattern. We've seen these a lot lately, how they make a nice run up and they pull back to moving averages and lighter volume. And then today, boom, nice 2% move. That move is not likely to be over. And then Roblox is another one on our list. And I like it above the 42.20, got there today for obvious reasons. Here is it. I think that was an earnings gap. All right, earnings gap, pull back to the moving average. Sound familiar? Making higher lows, blasting off today. That's enough for the software names. I got to get to the I talked about the semiconductors. NVIDIA is not getting all the love. This is an equipment stock, KLA, ticker symbol KLAC. Once again, you've seen this before, right? This wedge pattern as it pulls back to a moving average and then just blasts higher. AVGO. Take a look at this. Take a look at this chart prior to the move higher, right? Right. I mean, we see this a lot. And then the move higher. Keep that in mind because my last stock I'm going to show you has similarities to that move. Anyway, nice move for Broadcom. And then AMD, people saying, hey, AMD didn't go up today. Well, quit whining. It's up 7% or more this week. And just take a look at the weekly charts, folks, if you're worried about one-day moves in a stock. This has been consolidating for a long time, forming this cup-shaped pattern. This is AMD now. So since, June, okay? So it's been nearly 6 months, had this 3 weeks tight area, then pulled back, and then it, blasted off last week when Lisa Su announced a new product, and now it's up 7% this week, and I'm sure you're going to take 6 or 7% every week, right? Yeah, I think the old high here is in danger, 164. So just be patient, give it time. Like I said, the bias is to the upside. If it comes down and lets these moving averages to catch up, that's fine. Not going to go up every day, but AMD looks good to me. All right, I've got to get to the gapper since I've been talking about these. You want to hit some grand slams, you got to buy the smaller stocks. The $3 trillion stocks aren't going to double anytime soon. IoT has pretty heavy short interest, gapped higher, then pulled back nicely. This is kind of like that wedge pattern that we've been seeing a lot. Wedging back, kind of like a little flag pattern. Today it was up 5%. IoT looks good. See, this gapped out of a base, right? So it's not extended at all. And it pulled back. So they give the second, if you didn't get it on the first bite, you get it on the second one here. That's a nice move there. And it's still only, what is it? 16% above the 21. So maybe it does need some time for those to catch up. GTLB was not impressed with its gap higher, but this is why we monitor these things. Once again, it had that like a wedge-like pattern, on the you can call that a wedge, and then gapped hard the last couple of days. Wow, 64 today, 5.1%. That's a nice move. Okay. Once again, it's out of a base, like IoT, Samsara. This is out of a base. It's not extended. Another one is Sentinel-1, which is part of the cybersecurity cohort. So that got upgraded as well today. Gaps out of a base, trades higher. This did not pull back, so it didn't give you much of a chance. At some point, it's going to, and give the second round, give you a second. But this is pulling out of a base. It gapped out of a base here, and that's my main point. These stocks that are gapping out of bases are going to do better, I believe, than the ones that are already extended. This is Path, UiPath. And this, I got to show you this action this morning. It's pretty disgusting, actually. It traded down that first bar, just sold off, took out everybody's stops. I got stopped out on this thing. So when you get stopped out, you can always buy it back. That's the problem with using stops. And I get it. If you're not around, if you're out working, you put a stop and it gets taken out. But if you like a stock and you get stopped out, you can always buy it back. And this one got stopped out today. I think the low was like 22 in the low 22s or something, and closed near 25. Yeah, 22.94, and then closed up, That's a big move from $22.94 to $25. Anyway, just wanted to point that out. Once again, this gapped higher out of a base. And now it's kind of giving you a second chance here, pull back to its 10 on that big dip today. I doubt if it'll do that again and give you another chance, but we'll see. Each stock has its own personality. BRZE, another one that I like, and all this thing has done. When it reported earnings, it did not gap out of a base. It was already extended and it ramped higher and then reversed lower down to the 21. And it's just finding support at the 21 consistently. And I like that because on pullbacks, this gives you a lot of information here. Is like, where are the institutions buying this stock? Well, now you know that the 21, nice 2.5% move today. And I wouldn't take my eyeballs off this one. I think that high of 58.67 will be taken out eventually. Like I say, the bias is to the upside. And ESTC, well, flat on the session. I thought it was down today. I'm hoping it's down. I'm waiting for this to come down and just kind of go sideways here around that 115, 117 and allow these moving averages to catch up to them at some point. It might take a couple of weeks, but I had been showing you that it's been going up like $3 a day, 108, 105, 107. Today, the 10 EMA is 109. So, this green line here, it's going to catch up to it at some point. I don't know when, but I believe it will. Anyway, it's a lot of stuff for me today. I still have a couple things I want to show you. The short squeezes, ththese have been on our ready list this week, and people are asking, why do you put Carvana on? That stock's a dog, it's garbage. Well, this is why. Because when there's stocks that are heavily shorted, they have a tendency to move like 14% in a day. Last week, we had it and it was up 13% and it pulled back, and people are saying this thing's a dog. But this is what happens. It pullbacks to a 10 today, ramp 14%. And you can see that, how it's getting support there at the 10 since this gap higher. So definitely one to watch. It's extended now, but when the shorts start covering, you never know how high these things can go. Upstart is another one that's been on our ready list, and a lot of people don't like these stocks, and I get it. They don't have the sales and earnings growth, but they have a lot of short interest, and they have the ability to move 20% in a day, and that's why I put them on there, just to be, in this type of market with the, in a power trend, to take a little more chances, take a little more risk, and maybe you can hit, a home run. Anyway, that's it for me today, except for I lied. I have one more thing in the honor of the great Steve Jobs. I have a bet with a friend of mine who is a trader, and I had a bet earlier in the year between Tesla and SMCI, first one to 300, and I won that one. And I have a bet, first one now to 500, NVDA, which is at 480, or Netflix, which is at 479.98. I took Netflix. I believe that will be the first one to be there, and we'll see. I just had Netflix on our ready list this week. I have NVIDIA as well, but I like this pullback to the 21, and it pulls back to a moving average. Pretty sharp sell-off here, and now it's gaining support. And if that looks familiar, let's go to Broadcom, and it kind of did the same thing here. Pulls back to the moving averages and blast higher. I would not be surprised to see Netflix make a similar move. I could be wrong. Often wrong, seldom in doubt. Anyway, thanks for watching at mcstockcharts.com. We never give up.